Okay, now we have another problem. Problem of Von Allen. So Von Allen is a prominent independent contractor who offers architectural and engineering services. Since his career flourished, his total gross receipts amounted to 4.25 million for taxable year 2019. His recorded cost of service and operating expenses were 2.15 million and 1 million respectively. Question: how much is his income tax liability? So we have here computation. Okay. Gross receipts of 4.25 less the cost of service of 2.15. That's gross income of 2.1. Okay. Less operating expense of 1 million for a total taxable income of 1.1 million. If you notice, this is above the threshold of 3 million. So his tax due is computed as follows. So on the first 800,000, that's 130,000, and in excess of 800,000, that's total taxable income of 1.1 less 800 multiplied by 30% applicable tax rate, that's equal to 90,000 for the year. So for the total income tax due for the year is 220,000. Okay, class? So now, finally, we are in our last leg on our mixed income earner. For mixed income earners, the income tax rates applicable are the following. So the compensation income, okay, shall be subject to the tax rates prescribed under the tax code as amended. So the graduated income tax rates. Aside from that, since they are also earning from profession or business, they should also be, the income from business or practice shall be subject to the following. Okay, so aside from the graduated income tax rate, they are also taxed. What? If the gross sales or receipts and other non-operating income do not exceed the VAT threshold of 3 million, the individual has the option to be taxed at 8% tax rate based on gross sales and other non-operating income in lieu of the graduated rates under the section 116 of the tax code as amended. Okay? If you notice, if we compare the one on self-employed individuals, yung 8%, diba? 8% in excess of 250,000. But here, under the mixed compensation, mixed income earner, that's 8% tax only. According to the Bureau of Internal Revenue, the 250,000 tax-exempt income is not applicable to the business income of a mixed income earner availing of the 8% income tax rate option, since it is already incorporated in the first tier of the graduated income tax rates applicable to compensation income. Now, if the gross sales or receipts and other non-operating income exceeds the VAT threshold, the individual shall be subject to the graduated income tax rates prescribed under the tax code as amended. So you have here graduated income tax rate plus the value-added tax. Okay, so we have here, okay, now we have a problem of Johari. So Johari is a financial controller of Pick and Pack Packaging Company, who earned annual compensation in 2019 of 1.5 million, inclusive of 13th month and other benefits in the amount of 120,000 pesos. So aside from employment income, he owns a convenience store with gross sales amounted to 2.4 million. His cost of sales and operating expenses are 1 million and 600,000 pesos respectively, and with a non-operating income of 100,000 pesos. Question: compute for the taxable income and income tax of Johari if he opted to be taxed at 8% income tax rate on his gross sales for his income from business. So we have here computation. For his total compensation income, that is 1.5, okay, 1.5, less the non-taxable 13th month pay and other benefits, which is a maximum in the maximum amount of 90,000. So his total taxable compensation in income is 1.4 million. Since he opted to be taxed at 8% income tax rate on his gross sales for his income from business, his income tax computation for compensation is using the graduated income tax rate. So you have here on 800,000, that's 130,000. On excess of 800,000, that is 183,000. So total tax due on compensation income of 313,000. But since he is a mixed income earner, he also earned from his business. Okay, so the computation on his business income is as follows. Yes, gross sales of 2.4. We need to add the non-operating income of 100,000. So the total taxable business income of 2.5 million. He opted 8%. Diba? His gross sales, including the non-operating income, does not exceed the 3 million threshold. So all we need to do is to multiply it by the income tax rate of 8%. To get the tax due on business income of 200,000. So his total income tax due for the year is 513,000. Okay? Okay. Now, question. What if Johari did not opt for the 8% income tax based on gross sales receipts and other non-operating income? So this is what it's gonna be look like. Okay, for if he did not opt the 8%. So the taxable income from both the compensation and business shall be combined for purposes of computing the income tax due. So his total compensation income less non-taxable 13th month pay and other benefits of 90,000. You need to add the taxable income from business that is from 2.4 less cost of sales of 1.1. Yeah, we will have 1.4 million gross income less operating expenses of 600,000. So we'll have a net income from operation of 800,000. Okay. And then after that, we need to add the non-operating income of 100, total of 900,000. So, sige. So you will have 1.4 plus the taxable income from business, so that's 2.3 million. So how much is his tax due? Okay, so on the 2 million pesos, so that's 490,000. Okay, in excess 2 million, that's 2.3 less 2 million multiplied by the applicable tax rate of 32%, which is 99,200. So the total income tax he is going to pay is 589,200 pesos. So take note, in addition to the income tax, Jauhari is likewise liable to pay percentage tax of 72,000, which is 3% of the 2.4, this one. Okay, so aside from the graduated income tax rate, he should also be liable to pay for the percentage tax. Okay? Sige. So, guys, in our next video, actually, we will discuss gross income, no? And if you have questions, kindly please send me an email or PM me through Messenger. So, I hope you enjoy learning taxation just as I do, and you will be excited to complete a lot of more problems next week, no? Para mag-practice. So, have a happy weekend and good night.